All right, what's going on, everybody? Welcome back to the New Money Show. Mike has a new mic. What's going on, Mike?
Mike has a new mic. That's
Yeah,
funny. Hey
sounds
man.
crispy. It's coming through hot. It's been raining every day for the past about 4 days in Santa Monica, where I'm based, and people in LA just don't know what to do. Like everybody just freaks out, driving slow. Nobody owns umbrellas, so it's kind of like the apocalypse here right now.
A couple
Been
inches of rain.
interesting. Yeah, no, exactly. I've been like pretty much just like holed up at home. Can't get to the gym or anything like that. But anyways, we'll have another great episode for you today. Another financial product that's really interesting. And funny enough, I've been seeing more people talking about just within the last week or two. Maybe it's one of those things where, once you start paying attention, you see it around. But I feel like they're probably starting to hit a little bit more popularity now that they've got a track record. And that product is Fundrise, which essentially just lets you invest in real estate without buying property. And so, yeah, we have a good show for you today. We'll dig into that. Mike, do you want to give the financial disclaimer that this isn't investing advice?
Yep, absolutely. This is not investing advice. This is just two guys' opinions on the internet. So do your own research. Anything we talk about is really just our opinion.
Yeah, and like we say every show, thanks for that. Like we say every show, we essentially break down new financial vehicles that are available for the everyday investor. So these aren't opportunities where you have to have $1 million net worth to invest in. We're talking about new, interesting financial experiments that are being done with new places to park your money that you can get a return on. And today is no different with Fundrise. Like I said, it is essentially crowdfunding for real estate. And the interesting opportunity, I think, that is available with this new company, Fundrise.com, is the opportunity to start allocating a portion of your portfolio to real estate without having $1 million home or a huge mortgage. So you can kind of avoid the entire home buying process, but still have exposure to the real estate market. And I wanted to read one or two things that I found pretty interesting off the Fundrise site that was about just this shift. And because the way they really approach talking about this concept is more about how people balanced their portfolios, a decade ago, and how people are going to start to balance their portfolios today. So one thing they kind of brought up, which is common knowledge or like the quote unquote standard for investing for a long time, is this idea of modern portfolio theory. And they say modern portfolio theory, first introduced over 60 years ago, generally advises that you should buy corporate stocks and your own age in bonds. So if you're 30 years old, you should buy a portfolio that's a 70-30 mixture of stocks and bonds. The problem that Fundrise points out with this stock to bond kind of exposure in your investment portfolio is that it actually wasn't that diversified. You're really only diversified across two vectors, the stock market and then bonds, which is the debt market. And so what they see is a new opportunity is to add a third vertical, which is these private assets, which plenty of people who are really wealthy had access to for a long time because they were able to buy homes, they were able to buy real estate or alternative assets, but the general public didn't have access to another place to park your exposure, a third vertical to protect yourself against downside. And so they have what's called modern portfolio theory 2.0, which essentially allows you to, what they say, buy things that zig when the rest of your portfolio zags. In order to be truly diversified, you want to diversify across several different uncorrelated asset types. And they also want you to use time to your advantage. So rather than rebalancing your portfolio based on risk tolerance over time, you should also allocate based on liquidity needs. And that's another thing to think about when you're making an investment is how liquid does this investment need to be? How soon do I need my money back out? So that's kind of the basis, I guess, of what makes this new vehicle interesting is this shift for the everyday consumer to adding a new vertical for exposure with a different timeline of liquidity, and owning an asset that used to be so expensive but is no longer so expensive. So I think that's like the real core of what this technology is trying to do. Mike, I don't know if you want to talk more about, I guess, Fundrise, the platform, and sort of how that works. But maybe that's a good transition for just describing this product.
Yeah. So what they do is they make investing in real estate stupid easy. If traditionally, and I think this is why this is a great new money topic, is traditionally, if you wanted to invest in real estate, you would think you'd have to go out, you'd scout a location, you'd have to have, thousands, if not hundreds of thousands of dollars to invest in the property, probably take on a mortgage, which adds some risk, and either fix it up and put the work in or just pay someone to do it. So there's a lot of hassle along with the process, as well as significant, cash needs. With Fundrise, they have, I think you can start investing with as little as $500 in an already balanced and diversified portfolio of real estate. And they've even made it even more customized and simple, in that they have 3 basic offerings. They have one focused on generating income. They have one focused on longer term appreciation, and then something in the middle. So depending on kind of your time horizon or your goals, they have an option that really works well for you.
It's funny. It's like once you started describing the home buying process, I don't own a home yet. I probably will at some point, but I just feel lazy. Like I'm just like, I don't want to do all of that stuff and take on all that risk and worry about fixing up the place myself. And there's all that. And I think I might do that at some point, but it's just funny as you describe that, just shows you how much they're taking off your hands. And not only that, if you do that yourself, you're going to do that for one location probably at first, right? And it's now that Fundrise already has a diversified portfolio of many locations, it's actually a safer bet because they're handling that kind of for you, and they're already spread and diversified. So it's funny. It's more work. It's a bigger risk. You need more capital. It's more on you, and you don't know the market. And then, with Fundrise, they actually have experts, and they have a process, and they have teams of developers that they've worked with. They've got a history. They know how to spot stuff. I mean, they have the expertise and the ability and the time. And I think just the home buying process is like, I don't have any of those things, So it's
the other thing is that your potential risk is absolutely finite. So if I invest $500 in one of their plans, that is my cash at risk. Whereas if I'm a homeowner and something breaks, I have to go fix it. You basically pay them a 1% fee to take care of all that for you, to scout deals, to manage all the construction, redevelopment, all that headache. Essentially, they charge you a 1% fee for that.
Yeah,
which is pretty efficient.
And they handle the appreciation. So, and they also know what strategies are smart for the appreciation. So, there's just so much expertise. I mean, I think anyone who's looking at real estate, once you start digging in, you realize how much you don't know, how many terms, and there's just so many things to understand about real estate. And so, I just really like this idea a lot. I like that they're going to take the headache off my shoulders. And I liked something you mentioned, which is they're really simple options for the investors. They don't give you, where do you want to invest? They don't give you all these different options. You really just have three buckets that you can put your money in with them, which I'm sure makes it easier for them as well. And I actually think that the supplemental income investment that they have is pretty interesting to me, which basically means that if you put your money into Fundrise, they will give you quarterly dividends, sort of like a stock, from the cash flow of the real estate that you're invested in. So I actually like that, or the blended option, which is the long-term appreciation plus dividend, is pretty interesting to me. And I sort of wonder, I'd have to do the math, but I wonder at what point that becomes a meaningful income. How much you have to put in before a dividend starts to feel like you're really getting some benefit.
So I remember digging around um, the site, and they have a lot of good information, even
Yeah, it's
even
a great
on
site.
like past performance and dividends that have been paid out. If you think, I think I saw 6.5% annual yield on on the supplemental income side. So if you think $1,000 investment, that's $65. So it's a good benchmark of what you could expect, and frankly, that is a yield that's higher than you're going to get in the stock market. You're used to seeing a strong yield of like 2.5% from a stock, whereas here you're talking about 6.5%. So you could take that strategy as additional income to invest somewhere else, or I think they have a reinvestment program, which seems like a smart option as well. Just continue to reinvest into that vehicle. So it seems like it's a pretty strong option as well.
Yeah, I also like that. So, and this, I guess, is getting a little bit more to just like what makes this interesting. Like, I think at this point, it's safe to say both of us are pretty interested in this. Like, I feel like they've done a really great job putting together this product. The website is amazing information. So, if you're curious, you should definitely go to fundrise.com and browse around some more. Like, I just feel like they executed this so well. Like, this is the way that it sort of should be done. I want to talk about some advantages that I think the company has in terms of like kind of their future. And I think one thing that I see that's really fascinating, and it's come up before on the show, is Fundrise is starting to own demand from a pretty big group of buyers when it comes to purchasing real estate. So like I actually think that one thing they said on the site is that the way they source their deals is they actually get inbound deal flow from developers and people looking to kind of sell the real estate.
Yeah.
And those deals cross the desk of Fundrise. So like they actually have deal flow, which is amazing. I mean, that's a place you want to be, especially because they have such a big audience that they can probably make smart bets acquiring, new assets essentially, since they know they have all these investors kind of lined up for it. So from a business model standpoint, I actually think it's going to be a pretty successful move. A lot of this stuff is compounding, as their homes appreciate, as real estate goes up, as more deals cross their desk, as more people sign up. Like it really has a pretty nice moat almost starting to happen.
Yeah, I agree. I love the simplicity. This obviously isn't an easy topic if you're, getting into it on your own, but they've made it seem very, very simple. Almost as easy as, buying a stock and letting the company run on its own. This is kind of the same thing. So you're really putting your eggs in, is Fundrise competent in appreciating value, or, finding good cash flow deals. So, I mean, that's kind of the trust you're giving to the company.
And
They
because
seem to
of
have a
track
solid
record,
track record over the
yeah,
last few years. So
it's going to be very
that can
clear.
change, but it looks. I think if you're thinking about, as I think about it, it's something that I would ease into. I wouldn't, if I have a portfolio of, let's just pick a number because it's easy, $100,000 that I want to, deploy. I wouldn't jump to the number. Say I wanted 15% in real estate. I wouldn't just take 15K and throw it in here. I would kind of deploy it over time just to gain some trust with the platform and understand a little better. But it's definitely something that I'm definitely going to invest in for sure.
Yeah, I think so too. And I think like this is like, I mean, what's different about this product than some of the other ones we've talked about in the show and probably will in the future is um, I'd say this is like, I like that they framed it, and this is smart, but they frame it as this modern portfolio theory 2.0, which is like, no, like this is the standard. This isn't like the risk portfolio. This isn't like, some speculative bet that you're making. This is like what every investor should have some piece of exposure to. And that's kind of how the way I see it too, where like you said, if looking at how to allocate, this, I think to me, like, I agree. I'm kind of bought in on that. I'm like, yeah, maybe I should have like 15% of my total exposure in real estate like that. I don't know. I think I buy that, and I think it's smart of the company to position it like that way. And yeah, it makes sense that you want to have these kind of different vectors for exposure. The one thing that might be a stretch there that I guess I would push back against is how uncorrelated it is. One thing that they sort of explain is that, if you have this exposure of stocks to bonds, you're not that diversified. Maybe they have some type of relationship, and it's like, well, in '08, we clearly saw that both stocks and real estate took a dive. So
Right. Exactly.
how uncorrelated and how diversified is it? Then again, people need to live somewhere, right?
Mm-hmm.
So, from the Warren Buffett kind of point of view, it's just like, that's not going away.
Yeah. I think you can make the case for this at any point in time, but especially in the moment. But, real estate has climbed back as a whole since, 2008. The stock market has done the same. So they're both at all-time highs. So, the question just in general, as well as it applies to this, is now a good time to deploy cash into something like this? Or is it better to have cash on the sideline? I don't think anyone has the best answer. There's going to be opposing views on all of that, but that's another reason why, for me, it's about doing it kind of in stages and not necessarily all in at once, because that's kind of how you have a bad time.
Yeah. No, that's a great point. I think it makes me also realize that, so I'm not a homeowner, and it makes me sort of wonder if I'm going to prioritize where I want to put my cash in real estate. Do I want to own a home before I allocate to something like a Fundrise? Do I want to allocate to Fundrise and then use some of that to buy my own, like almost like in what order of priority? And obviously there's life things that happen that make you kind of make that decision as well. But I could see some benefits in maybe me first establishing some of my own, I guess, equity in a home prior to exposing myself to this like kind of pool. I mean, I think it is a more maybe traditional feeling, safer, quote unquote, asset to allocate to. But yeah, I'm curious for me actually what I'll do if I think about my own real estate before I think about this.
Yeah.
So
I think of them as two different decisions. I think of it, how do I want to, I want to live? What I have to maintain?
Yeah.
And the other, like, completely separate decision is, do I want some exposure to real estate, and is this a good mechanism for that?
Yeah. So
kind of the way I would think about it.
Yeah, and so I think I'd say I really like this product. It's probably one of my favorite we've covered so far.
Mhm.
It seems to me that this team is making really smart moves about how they even set this up. So I think I definitely can see myself allocating. I can see myself allocating to that kind of mixed option of dividend and kind of like long-term growth. That's really appealing to me. I would be excited about putting money into this.
And they also, just to kind of touch on horizon, I think they recommend having at least like a 5-year horizon on this.
Mm-hmm.
There are some, if you need the liquidity sooner, there are some like 3% or so penalties for trying to get to your cash. So, I mean, this is something, you're not trading these. It's not like you buy a share and then you trade it, a month later. This is something that you buy and hold. So I would think of it as a long-term investment. And I think for me, it's going to be a matter of figuring out how this all plays out into the goals, whether I look at it from a cash flow, dividend reinvestment, or just go for, I'll probably be on the goalposts, like on one side or the other, probably not down the middle if I had to guess right now, but I need to do a little more research and figure out which is the right direction.
Yeah. Awesome. So let's move to kind of the more speculative, I guess, portion of this, which is just like anything else that comes to mind around real estate. I think I brought up already one topic that is an interesting trend to watch across many of these platforms, which is owning demand. And so the more people who start buying into Fundrise, they have a pretty interesting vehicle where they have this platform of people who are putting money into real estate, and they can leverage that for better deal flow, for expanding. And so I think another thing along that same sort of topic that comes to mind is like almost like this centralization of real estate. Like I get a little bit concerned about land and real estate being a scarce asset, and the percentage of money that we need to spend on our paycheck, kind of, for real estate going up. And, yeah, I guess I just get a little bit concerned if you have these big behemoth companies with massive buying power that have a really long time horizon, they can afford to buy real estate at really high prices because they're going to hold it for so long. Whereas an individual has a shorter time horizon, and can't kind of like, bleed for that long. I mean, I know we have the 15 and 30-year mortgage kind of set up and that helps, but yeah, I guess I kind of just wonder where we're heading in general. Will the question I think that I'm posing is, will real estate continue to get more centralized over time? Whereas right now, plenty of people are homeowners.
It's an interesting question, and I
don't
see the
know
parallel there. Yeah, I don't have the answer, but I feel the same parallel when it comes to vehicles and in Uber. Is there a time in a 10 to 15-year time horizon where we don't have cars? Same kind of idea here.
We don't own cars individually.
Right. Yeah. So we just, beckon a car as we walk outside and it shows up autonomously. And, is there a time when real estate's kind of the same way? And, the other, I think we've touched on this a little bit in offline conversations, but is there going to be a time when we can home ownership isn't so, it's a little more fluid in that, if I decide I want to head out to San Francisco, kind of Airbnb style, if I can find that space for 3 months or kind of bounce back and forth when it's a little bit more fluid and not so very discrete, just finite, I guess, when it becomes a little bit more fluid.
Right. And
I also think there's some regional aspect of that. Like, I don't worry so much about that. And maybe it's because I'm in central Ohio, Columbus area. We have a little bit more room to grow. Whereas being in LA, you probably feel the
crunch,
the gridlock, or, whatever you want to call it, a little bit more than I do on a daily basis. So maybe that's just some differences in region.
That's a big topic, is like whether or not to build more. Obviously, San Francisco sort of feels that a lot. So yeah, I think it'll be interesting to kind of just watch. I guess the other thing to just watch is sort of where is real estate sort of heading in general. And I think that platforms like Fundrise sort of play into this, this type of development and this type of change, and that's kind of the idea of the show. So anything else newsworthy that kind of came up today? I don't know if I have too much on my radar. I found a bunch of new, it's just incredible the amount of new products that I'm seeing all the time. So there's some new products that we'll bring forward for episodes to describe like this, but I don't know, anything else kind of come to mind as something newsworthy that you saw?
Just for me, being more exposed to the general stock market, just trying to keep an eye on, how, the government shutdowns playing out and, tensions with China, just keeping an eye on some of those macro trends and just seeing how things are shaking out. I think right now for me, I have a lot of cash on the sidelines because I just feel like right now, with everything being at all-time highs, like across the board, it just feels like a scary time to be too over invested. But
for sure. Yeah, it's an interesting time. I think a lot of people are sort of just waiting to see what's gonna happen next. I think another thing that I'm seeing, just two interesting debates going on right now online. In some ways, it's a little bit like yawn almost, but I'm seeing a lot of people discussing the model of venture capital. I'm seeing a lot of people discussing new sort of micro funds for companies that are not intended to hit $1 billion plus, in valuation. So there's this huge debate going on right now. There's all these people submitting their thinking in blog posts about like, is VC the way you should run a company? Is it not the way, should you raise VC? Should you not? And it's just like, I don't know. I kind of don't even understand I think it's interesting to look at what those models are for, but the opinions about whether or not you should do it, I don't even know if it's worth kind of discussing. But anyways, it's just been interesting to watch. That's been a big sort of financial Twitter debate right now. because people are sort of just looking at VC and saying like, why does every company have to, grow fast or die essentially?
Hmm.
Um, and funny enough, I've been reading my friend Paul Jarvis's book, which has been great, called A Company of One. And so it's like the total opposite, approach. So anyways, that's an interesting, I think, trend happening right now. It's just people analyzing the differences.
Yeah, I I'm totally on board with all of that logic. I think when people first start getting involved in entrepreneurship, there's so much information that is all focused on being VC based, and it doesn't necessarily always lend itself to a productive and profitable company if that's the goal. So I think what it's forcing people to do is really think about what the goal of either the founders or the businesses in general, and also that time horizon. If you're going to build a business to sell in 5 years for $1 billion, it's completely different than, I'd like to just build a business that, can make me $1 million a year and I don't have to get too stressed. They're completely wildly different paths. And I'm excited that people are waking up to the idea that there's a different path than VC. So
Mm-hmm. Yeah. And I
being
think,
intentional about that is
right,
just what it's all about.
just knowing kind of what you're getting into. Well,
Yeah.
awesome. Thanks again, Mike. Thanks everybody for listening. If you're on YouTube or iTunes, please hit subscribe. Please rate the show. You can always reach out and just let us know on Twitter if you're enjoying the episodes. If there's a product that you've seen that you think is interesting, you'd like us to discuss, at New Money Pod on Twitter. We'd love to say hi. And we also share a lot of our findings and links and stuff like that there. So thanks again for tuning in. We'll be back again with another product here soon.
See ya.